How are you guys? How are you? This is Shocks and this is ShocksCapital FX. So today I am back with another video which I am going to explain to you the order blocks to avoid in the forex market. So you have heard about order blocks, you have heard about everything, but we'll just talk about perfect order blocks, order blocks order blocks this and that. But today I just want you to know, if you see these types of order blocks, you should be avoiding those types of order blocks. So guys, welcome back, and if you are new to this channel, we talk about institutional order flow, ICT, BTMM, and be sure to smash that subscribe button and turn on your post notification so that you don't miss any content from this channel. Whenever we do upload, we upload very useful information if you have to know. So guys, let's just go right into it. Number one, you have to avoid what I call confirmation candles. You have to avoid those ones. What are confirmation candles? If you ever I studied supply and demand, where they'll be telling you if price gets to this zone and you see this and so type of a candle, you sell. If you see this, you buy, like this candle right here, this one. This is a pin, right? So from where I come from, we call these confirmation candles. A pin, a star formation, a doji, those are confirmation candles. You don't use a confirmation candle like this pin as a what? As an order block. You only use candles that have no name. You understand? Candles that got no name. So if it is a doji, if it has a name, a spinning top, an evening candle, all those names you call them, you don't use those types of candles as what? As order blocks. So that's number one. Number two, we don't use candles without an engulf. Okay, what do I mean by that? If you see a candlestick without an engulf, don't use that. Let's say this red candle right here. You see that red candle right here? If you mark this candle as an order block, yes, it is an order block. Why? Because it is it initiated the move that broke these structures, number one. Number two, right? But yes, structural points were broken. But if you look at this candle, was it engulfed or not? As you can see, this following candle, we see this red candle, right? This following candle, which is the green one, is supposed to engulf the order block. But as you can see in this case, this candle was not engulfed by this one, this following candle. So you have to avoid those types of order blocks. And let me give you another example. You see this one here. It is both a confirmation candle and a what? And a candle that got no engulf. So you don't use that candle as a what? As an order block. You only look for candles with engulfs. So you are going to look for engulfs and you are going to use only that to enter your trades and to do business in whatever you are going to be doing. Okay, let's go to number three. So we are on number two, and number three, the type of order block which we should avoid, number three, is we are going to avoid candlesticks that do not break structure. You know that, right? If a candlestick does not break structure, that candlestick is not an order block. Let me give you an example. You see in this area, you have this right here. This is the low. Then you have these candlesticks in this area. Those are supposed to be the what? The order blocks. But this move that they produced did not take out structure. So in our book, or from where we come from, that is not a what? An order block. And if you look at this one again, this candlestick, this move did not break this major structure. It broke this, but this is not a significant what? A significant structure. So you do not consider these types of what? These types of candles. We only consider candles that break significant swing highs and swing lows, right? So we have a lot of examples of those ones in this area. So you just spot it and ignore, because those candlesticks are not high probability trades and are not high probability order blocks. So that's number three. Then number four, we are going to have to consider what I call propulsion blocks. You don't consider those ones as your what? As your order blocks again. Why? Why don't we consider those? A propulsion block is a candle, is an order block that is formed after retesting another order block. Okay, what do I mean by that? Okay, let's look for an order block, which is, okay, let's look for an order block. This is an order block, as you can see, this right here. That is an order block, right? That order block was retested by this OB. So we don't consider this as a what? As an order block, because it's a propulsion block, or it's an order block that was formed by retesting another order block. We only look for fresh and original order blocks when we are looking for order blocks to trade. We don't consider order blocks that have formed after retesting or that have been retested before. As you know, and if an area is retested many times, it will soon break. So we don't want an area that is hit too many times, because that area is going to break anytime. So we don't consider those types of areas. Why? Because an area that is retested many times will soon break. So that's the reasoning behind that. So you don't consider those order blocks. You just want one-time order blocks, fresh and original. Then number 2, we are the last one. We're going for big order blocks. We don't consider big order blocks. What do I mean big? If you look at any pair in Forex, if you look at any pair, there is a certain types of candles that pair presents. If you look at this by chart, you can see that this is not a very good order block. Why? Because the candlestick, or the candlesticks which we are choosing as an order block, is so big compared to the candlesticks that we are seeing here. You don't consider this also, because that is too big. This one, this red candle, that is too big. You don't consider that as an order block too. And the other thing is, remember, when you are choosing order blocks, this is an advanced way of looking at what? At supply and demand. So we are looking at high probability, low risk order blocks. But if you see these ones, they are not low risk. As you can see, they are not low risk. There is a lot of risk with these order blocks, but so you can be sure not to choose them and look for order blocks that present with the rules that we gave on this channel. So guys, if you are new to this channel and you don't know absolutely anything about order blocks, just go back, watch our videos on order blocks, watch our videos on market structure. You will understand what we are talking about on this channel every day, every week, every year. So guys, I hope this was very helpful to you. I'll see you in the next video. Enjoy your day wherever you are, and remember to trade what you see. I'm Shocks, and I'm out.